Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Thursday, February 26th. Firstly to the S&P 500, and here we've seen a change of trend today as expected. The previous day's trading at the end of this very strong first time frame uptrend and the strong trading up above the round number 2100, we saw the formation of a spinning top indecisive type candle, and that set the market up for a change of trend. Now we have seen confirmation of that today, with the market making a lower high and a lower low. Now, having said that, however, we've seen the sellers fail to take control in this candle. So for the previous day's trading, we had an indecisive candle, neither side in control, neither the buyers nor the sellers. Prior to that, the buyers in control, and for the previous 3 days to that day, we saw the buyers in control. So with today's trading and a change of trend, we would have expected to see the sellers at least take some form of control, if not strong, or it should have been a moderate amount of control. But we've seen the buyers attempt to take back control, and that suggests that there is a good possibility of a change of trend back to the upside. So we'll be looking for a higher high and a higher low, and for the market to potentially test up to the 2119 major high. Now, with the strong support just down below where the low of this current candle is, the sellers are going to have to be very, very strong to breach that area. We also have the Tenkan-sen trading around there, 2102. And then just down below there, a previous swing high around 2093. So very, very solid support down below where this market's trading at. But with the sellers losing commitment here, it does suggest that the next move here is likely to be the buyers coming back into the market. Now, no guarantee of that happening. What we need to do is watch how the market trades at the open, watch the low of this current candle, watch this area around 2100 and just below. And just looking at this previous Fibonacci extension, and previously we saw the bullish breakout up above the 78.6% level, but the lack of follow through yesterday and the indecisiveness around this 78.6% level suggested that the market was ready for this change of trend in the first time frame, and we have seen the confirmation of that today. Now, also examining the Fibonacci retracement, we're in an expansive mode of that, trading through the 100% level, through the 161.8% level, and then almost touching that 261.8% level at 2121, which was our target here with the S&P. We actually traded to 2119, and with the indecisiveness entering the market, it suggested also that there was a good possibility of a change of trend, with confirmation coming here today. Now, just looking at the bands here with the S&P, and once again we're seeing the upper band hold as support for this market. The previous bullish trading up above the upper band, holding a support when we had something of an attempted retracement, but the buyers coming back in solidly. And for today's candle on a new first time frame downtrend, the sellers losing commitment down below the upper band. So it suggests that there is a very real possibility of the trend changing back to the upside. Now, we should be watching that upper band at the moment, trading around the 2108 level roughly, for potential continued support. But if we do see a bearish close within there, we could then see something of a retracement. So we're very keenly watching that area. Moving next to Apple, stock listed in the US market, and AAPL is the code. And just looking at the weekly chart first, on the left hand side, Ichimoku, and we have the formation of a doji candle at the moment. Now, bearing in mind that this candle hasn't finished trading, but if it does finish like this, it does suggest that there is potential for a change of trend, with this being an indecisive type candle. Now, if we do see a change of trend, and we will be looking for a potential lower high and lower low to confirm that, if we do see that, we're looking at very strong support coming in at this previous swing high down around the 119.75 level. We also have the Tenkan-sen trading around that area, which is trading at 119.12. So there's going to be very, very solid support down below there. Now, bearing in mind that this market is bullish in all three time frames, trading above the cloud, above the Kijun-sen and the Tenkan-sen, and it's probably not overdue for, or it is probably overdue for a rest and something of a retracement. And we know that markets can't continue to the upside forever, but it would be healthy for Apple to just have something of a retracement, and then for us to see the buyers come back in. Now, looking at the relative strength here, strongly outperforming the S&P for the past month and a half or so, with the relative strength comparative outside of the upper band. And we're also looking at volatility here. Volatility is actually ticking up off a cyclical low and still continuing to trend higher and quite strong. So we may not see any retracement. It just depends on how this current candle finishes and whether we see confirmation of that with a lower high and a lower low. Over to the right hand side, and we see the market trading above the bands here, the 1 standard deviation Bollinger Bands, suggesting that we have a very strong bullish market in the medium term time frame, and any potential retracement is likely to find strong support around the upper band, trading at 122. So very solid support from about 122 down to around that Tenkan-sen indicator, roughly about 119, just below 119, actually at 119.12. And just looking at the daily chart here on the left hand side, the Ichimoku chart, and we've seen the market just closing down below the Tenkan-sen indicator in a bearish manner, and it's the first time in quite some time that we've seen that. Now the important thing here is that we have seen follow through. We've seen a continuation of the trend to the downside today, with this candle making a lower high and a lower low, but it's a bullish candle. It's a candle where the buyers have taken back control by closing up towards the high, and we've seen formation of a white body here, which suggests that upside momentum is now switched back to the buyers away from the sellers, where it was quite strongly with the sellers previously. It's switched back in a moderate manner back to the buyers, and suggesting that there is good potential for a change of trend back to the upside. So we'll be looking for that. Watching the low very closely. The low trades at 126.61, and if we see the market trading down through there early, we could see retracement back down to around this 119.75 area. But as we saw on the weekly chart, there is very strong support down around there, with the Kijun-sen also trading around there at 120.93. Now, interestingly, looking at volatility is coming off, so it is suggesting that we may not see further continuation of this strong uptrend that the market has been in for a couple of weeks, and possibility of this retracement going deeper, or of the market congesting. So we'll be keeping an eye on that, and we actually have volatility trending down quite strongly by moving down below that lower band there. Looking at relative strength performance, we've seen Apple outperforming the S&P quite strongly, but now in the last couple of days we've seen the relative strength comparative move back within the bands here, so suggesting that even though we are still outperforming, it's not as strong as it was previously in this period. And moving over to the right hand side on the daily charts with the bands, and we saw a bearish close within the upper band, and it suggested that there was good potential for Apple to test down to the middle band, roughly about 124. We have seen continuation of that trend to the downside today, but on this bullish candle and price rejection from within the bands, and the market closing up above the upper band once again, it suggests that there is a good possibility of the buyers coming back into the market to continue the trend on its way. So we're getting a lot of mixed signals here with Apple. Should be watching the low here very closely, once again trading at 126.61, and the high, if we are going to see a continuation or a change of the trend to the upside, the high trades at 130.87. Moving next to the Euro US dollar. And here we see a fairly large black body candle that's formed for the close of today's trading. Sellers taking control, very strongly committed to taking this market lower, establishing a new first time frame downtrend. And importantly, the size of this body is the largest that we've seen in this market for quite some time, and it suggests that the sellers have returned here very, very strongly. Now, the other important thing here is that we've had this strong bearish close down below the lower barrier of this congestion area that I identified previously as something of a symmetrical triangle. They tend to be continuation patterns, and with the close down below the lower barrier, it does suggest that there is a good likelihood of this market continuing to trade lower. We have a target. The target is the width of the pattern projected to the downside from the breakout, and I won't put that on yet for a good reason, and that reason is that the market hasn't interacted with the previous strong support below 111.60, and what I'd like to do is see the market clear that before I have any strong faith in further development of the trend to the downside. So if you are risk averse, if you are not risk averse and have a large tolerance for risk, then perhaps trading the close down below the bottom barrier would be a method of trading this, and the less risk averse traders would probably wait for clearance from this swing low around the 110.98, 111 area. Now this market is bearish in all three time frames, trading below the Ichimoku cloud and below the Kijun-sen and the Tenkan-sen, and the market has bounced off that Kijun-sen and Tenkan-sen in a bearish manner, and that area there has been holding for the last week or so as very strong resistance, and now we see that very strong price rejection with the market testing lower. So watching 111.60 and watching the swing low down around 111 very, very closely for a continuation of the trend to the downside. And what we'd like to see on the breach of these areas is the strong follow through, the strong bearish close down below these regions.